Good afternoon, everybody. This is Bob Iacchino. It is July 23rd. I am the founder of Path Trading Partners, and I'm here along with my co-founder, Mike Arnold, to do a weekend Path Chat update on the futures markets. I'm also going to do a quick review of last week and then a preview of some of the economic data for this week that we think is important. So let me go ahead and get started. So last week, global equities set records. The Goldilocks environment of moderate growth and accommodative central banks. We heard Mario Draghi even refuse to call things tapering and tightening, but removal of accommodation. European shares have been relatively lagging behind the U.S., possibly held back by the rise in the euro, which could hurt the competitiveness of exports. Yield on the U.S. 10-year Treasury note fell to 2.24% from last week's 2.32% and a high close to 2.40% late the prior week. And the price of a barrel of WTI crude oil remained unchanged, basically at $46.35. So it was a down week for crude oil with a really weak Friday. After we saw the decline of oil rig counts, we actually lost one oil rig in the U.S. But the OPEC data that came from a specific consultancy that measures oil tanker weights and shipments claimed that OPEC is actually producing about 145,000 barrels more than they were in the previous month. So OPEC's production is back above 33 million barrels a day if this particular company is to be believed. So let's talk a little bit more in detail. So equity prices continue to rally. The U.S. recovery, as we've been calling it, is about to enter its 9th year. And the S&P is still setting records. The MSCI World and the Russell 2000 and the NASDAQ Composite Indexes also set records this week. The Bank of Japan inflation target slipped further into the future. The BOJ postponed by another year the date it expects to achieve a 2% inflation target. They're now forecasting that they'll be achieving that by March 2020. This is the 6th time the Bank of Japan has pushed that target out into the future. The central bank projects the CPI, excluding food and energy, will rise to only 1.1% in the year ending March of 2018. The European Central Bank, specifically Mario Draghi, again denied discussing tapering asset purchases at its meeting that it had on Thursday. It left both rates unchanged and left the asset purchase target unchanged. And Draghi, again, as he's been doing, denied having discussed tapering asset purchases at all. He did say that they had an agreement to begin discussing the timetable for beginning to taper purchases in the fall. So it's interesting, they announced a timetable to talk about the timetable. But then somebody asked if their September meeting took place in the fall, and he said he wasn't ready to discuss that as well. It's interesting because the comments were dovish, but Draghi's tone seemed a little bit more hawkish. The UK has finally accepted that they owe a divorce payment, and they're rumored to be considering accepting the free movement of EU citizens into the United Kingdom for a 4-year transition period. So that was kind of important in a softening of the Brexit talks. In terms of the political front, Donald Trump turned on Attorney General Jeff Sessions in a very public way, basically saying that he would not have hired him if he knew he was going to recuse himself from the Trump-Russia investigation scene. So that's the first sort of public attack we saw on Jeff Sessions. And Senator John McCain from Arizona was diagnosed with an aggressive form of brain cancer. So that makes his return to Washington, D.C. anytime uncertain. So the Republicans have a 52-48 advantage in the Senate. That now goes to 51-48 because his vote doesn't really get replaced. So you still have Vice President Pence, who presides over the Senate. That would break any ties, but now we've got an odd number, so there wouldn't really be any ties. It just basically means they could not lose one more person. Then something interesting to note, for the year ending March 2017, foreign purchases of U.S. residential real estate hit a high. According to the NAR, the National Association of Realtors, foreign buyers accounted for fully 10% of the dollar value of U.S. homes purchased over the year, up from 7% the year before, amounting to about $153 billion in purchases. Buyers from China and Canada led the list, followed by those from the UK, Mexico, and India. Sales were concentrated largely in what you would expect, Florida, Texas, and then also California. So that's really about it in the macro news. The big news last week was the ECB and the Bank of Japan pushing that out. Let's talk a little bit about the economic calendar, some of the things we expect to see, and some of the estimates for next week. Starting at 7:30 p.m. tonight, we've got Nikkei's Japan PMI, the manufacturing is July's preliminary. I've got no estimate on that, but last was 52.4. And that's really it in terms of important news for tonight, July 23rd. Again, all times are going to be Central Time as I read these off. Monday, July 24th, we've got a slew of PMIs which might actually affect the euro quite a bit, given that we moved off of Draghi for 2 days. We spiked twice, 2 days in a row in the euro US dollar. So these will be important. We've got Germany's manufacturing, service, and composite market PMIs for July. The manufacturing estimate, 59.2 versus 59.6 last. The services estimate, 54.3 versus 54 last. And the composite, 56.3 versus 56.4 last. That will be happening at 2:30 a.m. Central Time. Then at 3 a.m. Central, Eurozone manufacturing, services, and composite PMI from market. Those are all from July. So the manufacturing expected at 57.2 versus 57.4 last. Services expected at 55.4. That would be unchanged from where it was last. And the composite 56.2, down a tick from 56.3 last. 8:45 market releases its U.S. version of all three of those. Manufacturing PMI, services, and composite for July. Manufacturing expectation 52.2 versus 52 last. Services PMI 54 versus 54.2 last. And the composite 53 is expected versus 53 last. 9 a.m. existing home sales month over month for June in the U.S. That's expected to come out down 0.9% versus up 1.1%. And then at 6:50 p.m. in the evening, the Bank of Japan minutes for the June 15-16 meeting. Those could actually be very interesting for dollar and yen. Moving on to Tuesday, July 25th. At 3 a.m. Central Time, the German IFO business climate, expectations, and current assessment for July. Business climate expected 114.9 versus 115.1 last. The expectations index 106.5 versus 106.8 last. And the current assessment expected 123.8 versus 124.1 last. So Monday's data plus this early Tuesday data is going to be pretty important when you put it in the context of what Mario Draghi said. 8 a.m. Central Time, U.S. House Price Index month over month for May, expected to be up 0.5 versus up 0.7 last. Then you've got the Case-Shiller Composite U.S. home prices year over year expected unchanged at 5.5%, and the Shiller Composite 20 year over year expected up 5.8 versus 5.67% last. 9 a.m. U.S. consumer confidence for July expected to tick down a little bit to 116 from 118.9 last. And then the situations index was 146.3 last. No estimate on that. Then we've got the Australian CPI quarter over quarter and year over year. The year over year expected up 2.2% versus up 2.1 last. And the quarter over quarter, and this is for the second quarter totals, expected up 0.4 versus 0.5 last. Then you've got a variety of core consumer prices that Australia produces, the trimmed mean year over year and quarter over quarter, and the weighted mean year over year and quarter over quarter. Let's just look at the trimmed and the weighted year over year. The weighted year over year is expected to be up 1.7. That would be unchanged from last. And the trimmed mean year over year for the second quarter expected to be up 1.8 versus 1.9 last. Again, 8:30 p.m. Central Time. 10:05 p.m. The Royal Bank of Australia's Philip Lowe gives a speech in Sydney, so that will matter. Moving on to Wednesday. Midnight Japanese small business confidence for July expected at 49.5 versus 49.2 last. 3:30 in the morning, UK's gross domestic product quarter over quarter and year over year. This is still for the second quarter. Year over year expected 1.7 versus 2.0 last. That's going to be on the heels of a slight reduction in CPI in the adjusted number that we got last week for the UK. Gross domestic product quarter over quarter expected at up 0.3 versus up 0.2 last. 9 a.m. Central Time, US dollar new home sales month over month for June, expected up 0.8 versus up 2.9 last. Then we've got the Department of Energy crude inventories. That'll matter quite a bit given the OPEC news that I mentioned earlier. And then at 1 p.m., Federal Open Market Committee rate decision. And the rate decision expected to be unchanged, and we'll be watching for any statement changes after that rate decision. There is no press conference after this particular Fed meeting. Moving on to Thursday, fairly thick day Thursday of data. We've got German retail sales year over year expected up 2.7% versus up 4.8 last. Consumer confidence survey in Germany at 1 a.m. expected at 10.6. That would be unchanged. 7:30 a.m. in the U.S. All of the following is at 7:30 a.m. Durable goods orders for June expected up 3.5% versus down 0.8 last. Jobless claims and continuing claims. The jobless claims estimate is 240,000 versus 233 last. Durable goods ex transportation also coming out, by the way, expected up 0.4. Expected up 0.4 versus up 0.3 last. Then we've got advanced goods trade balance for June, expected to be down 65 billion. They were down 65.9 billion last. And then wholesale inventories for June. Those are expected to be up 0.3 versus up 0.4 last. Then very interesting, 9 a.m., Randall Quarles, the nominee for the Federal Reserve Board, his confirmation hearing begins at the Senate Banking Committee. A lot of that will be televised, and I'm sure quite a bit of sound bites will be coming out of that, and it could speak toward policy, so that'll be interesting. It has the potential to move the markets. 6:01 p.m., GfK Consumer Confidence Survey in the UK, expected to be down 11 versus down 10 last. Then Japan data, 6:30 p.m., jobless rate, household spending, and the National Consumer Price Index year over year. Consumer Price Index is expected at 0.4 versus 0.4 last. Household spending expected to be up 0.5 versus down 0.1 last. And the jobless rate is expected to come in at 3% versus 3.1% last. Then there's the ex-food and energy number for Japan, expected to be down 0.1 versus unchanged last. Then you've got the summary of opinions at the July 19-20th meeting for the BOJ. That's the meeting I talked about earlier in this segment. Then we've got Japan's retail trade numbers year over year for June, expected to be up 2.3% versus 2.0 last, along with Japan's large retailer sales expected to be down 0.1 versus down 0.6% last. Then finally, Friday, July 28th. Again, a decent data day. We've got UK nationwide house pricing index, non-seasonally adjusted year over year, expected to come in at up 2.7 versus up 3.1 last. 12:30 a.m. Euro French gross domestic product year over year, expected at 1.6%. Moving down to 7 a.m. Chicago time, German consumer price index month over month and year over year. Year over year figures expected to be up 1.5% versus 1.6 last, and month over month expected to be up 0.2 versus up 0.2 last. 7:30 a.m. Central, Canada's gross domestic product month over month and year over year for May. So this is a revision. The May year over year expected to be up 4.2 versus up 3.3 last, and the month over month up 0.2 versus up 0.2. Same time, U.S. gross domestic product annualized for the second quarter. That's expected to come in at 2.5% versus 1.4 last. Personal consumption, which is a number the Fed looks at, and personal consumption expenditure, which is another number the Fed looks at, expected to come in at 2.8 and 0.7% respectively. Those are both higher than they were last month. Then you've got the employment cost index for the second quarter, expected to be up 0.6 versus up 0.8. Then 9 a.m., University of Michigan consumer confidence for July. That's a final figure, expected to be 93.1 versus obviously 93.1 last. And then we've got the U.S. Baker Hughes rig counts, which I mentioned the oil rigs actually dropped by 1 rig this week. So that will matter, as it always does for crude oil prices. That is about it for last week's review and this week's economic data preview. In the meantime, let me turn it over to Mike to show you how low this VIX is. It's going to be the first thing he's going to talk about. It's a VIX chart on your screen. Mike, what's up with that VIX?
Thank you very much, Bob. So on our VIX watch, low 930 today, closing 936, lowest on my charts for all the data I have going back 20 years. As you can see, that's the lowest it's been in 20 years. I don't know what the lowest ever it has been. I don't think we've ever seen an 8 handle. Talked about it on this week's podcast. I am waiting for when we do print the VIX in the 8s. What did we do with the financial futures today? Let's take a look at the Dow Mini Futures. Dow Mini Futures. Let me expand the chart a little. So, caught in a range pretty much all week. Couple dips into the rotation zone and bounced back up. We still had a down close today. A pretty key support is 21,520. So if we rally back up, key things we'll be watching for. First level of resistance is going to be 21,600. Then we're going to be watching for 21,628. If we do get through there, the key levels higher, these are new GAN projections, 21,676 and 21,726. And on a very strong rally sometime next week, we could see 21,733. Pullback areas, as I mentioned, 21,520 is key support. Then we're going to be watching for the 21,480 prior breakout zone area. If we do get below that, bottom of the rotation zone coming in about 21,445 area, and a rising trend line roughly going to come in at that same point. If that is broken, you'll be watching for 21,378. Switching over to the S&P. Again, expanding it so we can really see what's going on with the price action. Reached up yesterday, new high, pulled back today, not quite down to the key level of 2,461. So we'll still be watching if we sell off 2,463 to 61 first level, then possibly dropping to 2,458.50 area, and on a bigger pullback, 2,448. Rally resistance coming in 2,476. Once we get through there, we'll be looking for the next key GAN level projected higher, 2,485. Switching over to the NASDAQ, which also had a slight pullback today. All right, we have newly projected GAN levels on this one too. Pulling back straight to the 12.5% GAN level, 58.90.50. So that's going to be first support coming in on Monday. We might find some minor support coming in about 59.08. So you can watch for that also. On a bigger drop, next key levels 58.64, and then possibly back down to the 58.40. Rally back up, resistance 59.40 first level. Then we'll be watching for some older GAN projections we have not hit yet, 59.51. Then the 59.88 to 59.95 areas. Switching over to crude oil. Crude oil futures, pretty decent drop. So back into this congestion area it's been in now for a couple weeks. You can see how long we were back in here in early May, then in early June, then in early July. Now in late July, we're back in the same price range. So a continued down move. Next major support's not going to come in until about 45.09 to 44.96 is going to be very major support in that. If we do get below that, we'll be watching for about 44.25. On a rally back up, key resistance 47.32 to 35 area. Then our defining point on our trend line 47.73. If we do get through that, watch for 47.89 to about 48.05 area. Over to gold. Gold has had a very nice rally. This did trigger a trendline trade back on the 14th of July. Hit the 1244 area target. Then it's hit the significant level, 1246.50. Then the full clear path target at 1249.70. And now it's gone through some other key levels, closing on a major GAN level, 1255. So continued rally. Next area is 1258 to watch for. Then we'll be watching for 1263. Then the 1265 to 1265.50. On a pullback, 1251 to 1249.50 is going to be some key support. Then major support coming in about this 1246.50. Then if we do fall lower, watch for right around the 1244 to 1242 area, and we'll also get the rising rotation zone coming in there at some point. Over to silver to wrap up with this weekend review. Also very nice rallies in silver off the lows into this clear path. Next targets higher, we're going to be watching for 1658, 1670, and then a possible return to 1683. If we pull back, 1636 first support, then major support coming in about the 1625 area. If that is broken, we will be watching for 1618 and then possibly down to 1611. That's all we have for you with this weekend update. Turning it back over to you, Bob.
Thanks for that, Mike, and thank you guys for watching. Don't forget to check out the Money Path podcast. You can find it at our website or at iTunes or Google Play by typing in the Money Path podcast. Or again, it's right up there. You can just play it right off of our website if that's the way that you choose to do it. This is episode 81. We're only 19 away from our 100th episode. So check that out. Hit like and subscribe if you like what we're doing. And if you're interested in cryptos, don't forget to check out all our cryptocurrency videos, Litecoin, Bitcoin, and Ethereum. Cheers, everyone. Thanks for watching.